These are not merely suggestions, they are the bedrock upon which the most successful traders build their empires, rules they adhere to with absolute tenacity and never, under any circumstances, break. Understanding and internalizing these core tenets can transform an aspiring trader's approach, shifting it from speculative gambling to a professional pursuit. This exploration delves into the 10 non-negotiable practices adopted by elite traders, revealing the strategic mindset that underpins their extraordinary financial achievements. These insights offer a clear pathway for anyone seeking to emulate their success, emphasizing that consistent application of these habits is far more potent than any single market prediction. 1. Treating trading as a business, not a hobby. Successful traders, particularly those who have amassed fortunes exceeding $100 million, fundamentally view their trading activities as a full-fledged business enterprise. This perspective mandates the same rigorous planning, meticulous financial management, and strategic foresight typically applied to any large corporation. They understand that trading involves inherent costs, including commissions, data subscriptions, and potential losses, all of which must be accounted for and managed effectively. Furthermore, they meticulously track their expenses, forecast potential earnings, and prepare for tax obligations, treating every financial aspect with the seriousness it deserves. This business-oriented mindset extends to acknowledging and integrating the inevitability of losses and market uncertainties into their operational framework. They do not merely hope for profits, they plan for contingencies, understanding that setbacks are a natural part of the trading landscape. Developing a comprehensive strategic plan is paramount, outlining clear short-term objectives alongside ambitious long-term financial goals. This plan acts as a roadmap, guiding their decisions and ensuring that every trade aligns with their overarching business strategy. Without this foundational business approach, trading remains a speculative endeavor, lacking the structure and discipline required for sustained, significant wealth creation. It is this professional dedication that truly distinguishes the elite from the amateur. 2. Unwavering adherence to a trading plan. A cornerstone of elite trading success is the principle, plan your trade and trade your plan, a maxim rigorously followed by Wall Street's top performers. A trading plan is not a vague idea. It is a meticulously written set of instructions detailing every aspect of how a trader will engage with the market. This comprehensive document precisely defines entry points, specifying the exact conditions under which a position will be opened, alongside clear exit points for both profit-taking and loss mitigation. It also incorporates crucial capital management criteria, dictating the size of positions and the maximum allowable risk per trade. The formulation of such a plan is rooted in extensive market analysis, combining both technical and fundamental insights to identify high-probability setups. Crucially, successful traders rigorously backtest their trading ideas, using historical data to validate the efficacy of their strategies before deploying real capital. This systematic approach eliminates guesswork and emotional decision-making, ensuring that every action taken in the market is premeditated and strategically sound. Deviating from a well-tested plan is considered a cardinal sin, as it introduces subjectivity and volatility into a process that demands objectivity and consistency. The discipline to stick to the plan, even when instincts scream otherwise, is a hallmark of those who achieve extraordinary financial results. 3. Strict risk management. One of the most defining characteristics of traders who have accumulated nine-figure fortunes is their absolute commitment to stringent risk management. These professionals operate under an unbreakable rule. They only risk capital that they can genuinely afford to lose without jeopardizing their financial stability or psychological well-being. This fundamental principle protects their trading capital, ensuring longevity in the highly volatile financial markets. Effective risk management is not merely a suggestion. It is a critical survival mechanism, differentiating those who endure and prosper from those who are quickly eliminated. Central to their risk management strategy is the mandatory use of stop-loss orders for every single trade. Before even entering a position, these traders precisely define their maximum acceptable loss and place a stop-loss order to automatically close the trade if the market moves against them beyond that predetermined point. This proactive approach prevents small losses from escalating into catastrophic account-destroying events, safeguarding their capital base. By predetermining exit points, they remove emotion from the equation, ensuring that losses are cut swiftly and decisively. This unwavering discipline in protecting capital is not just about minimizing losses. It is about preserving the ability to continue trading and capitalize on future opportunities, making it an indispensable habit for sustained success. 4. Emotional control and discipline. The financial markets are a crucible for human emotions, and unchecked feelings like fear, greed, and impatience frequently lead to irrational decisions and incredibly costly mistakes. Wall Street's elite traders, however, master the art of emotional detachment, approaching their trading activities with a calm, rational, and objective mindset. They understand that allowing emotions to dictate trading actions is a direct path to financial ruin, and they diligently work to separate their feelings from their trading outcomes. This ability to remain composed under pressure, whether facing a significant loss or the temptation of an overly ambitious gain, is a hallmark of their success. Discipline serves as the unyielding bulwark against emotional impulses, enabling these traders to adhere strictly to their predefined trading plans and risk management rules. It is the discipline to cut losses quickly, even when hope whispers for a reversal, and the discipline to resist chasing gains, even when the market seems to be offering easy money. This unwavering self-control is what allows them to preserve their capital, ensuring they can participate in future market movements. Furthermore, it significantly increases their chances of achieving consistent profitability over the long term, transforming trading from a battle against the market into a battle against one's own psychological vulnerabilities. Mastery over emotions is, arguably, as crucial as any technical skill in the world of high-stakes trading. The journey of understanding market dynamics, mastering emotional discipline, and adhering to robust trading plans is a continuous one, demanding both intellectual rigor and unwavering commitment. Many successful traders throughout history have emphasized the importance of learning from the past to navigate the complexities of the present and future markets. Their experiences offer invaluable lessons, revealing patterns of human behavior and market reactions that echo through generations. To truly grasp the essence of financial markets, one must delve into the historical narratives that shaped them, understanding the triumphs and pitfalls of those who came before. This historical perspective provides context and wisdom, serving as a powerful guide in an ever-evolving landscape. For those eager to deepen their understanding of Wall Street's rich and often turbulent past, there is an extraordinary resource available. 50 Years in Wall Street. This monumental work, presented in 2 beautifully illustrated volumes, offers the fundamental memoirs of Henry Clews, a prominent figure who witnessed and shaped half a century of Wall Street history. From the panic of 1857 to the opulent Gilded Age, Clews provides unique narratives of financial titans, intricate market manipulations, and unparalleled insider views into pivotal economic events. This book isn't just a historical account. It's a deep dive into the human element of finance, offering timeless lessons on market psychology, risk, and opportunity. To immerse yourself in these foundational stories and gain an unparalleled perspective on the forces that drive financial markets, we strongly encourage you to find the link to 50 Years in Wall Street in the description below and secure your copy today. 5. Continuous learning and adaptation. The financial markets are dynamic, complex ecosystems that are perpetually evolving, driven by an intricate interplay of economic forces, technological advancements, and shifting global sentiments. Strategies that proved highly effective yesterday can rapidly become obsolete today, rendering static approaches ineffective and ultimately detrimental to a trader's capital. Recognizing this fundamental truth, Professional market participants with nine-figure portfolios commit themselves to a relentless pursuit of knowledge and continuous learning. They understand that stagnation is synonymous with failure in this fast-paced environment. Their dedication to learning encompasses a wide array of disciplines, from macroeconomics and geopolitical analysis to advanced quantitative methods and behavioral finance. This continuous educational process enables them to effectively forecast emerging market trends, anticipate significant shifts, and refine their trading strategies accordingly. Moreover, these elite traders exhibit remarkable flexibility, readily adapting their approaches in response to changing market conditions. They are not afraid to abandon a strategy that is no longer working, instead embracing new methodologies and frameworks that align with the current environment. This agile and adaptive mindset allows them to identify and capitalize on new opportunities as they arise, ensuring their strategies remain relevant and profitable amidst constant change. 6. Maintaining a trading journal and analyzing trades. For successful traders, especially those who have achieved remarkable wealth on Wall Street, the adage, "statistics are undeniable," underpins a crucial daily habit: the meticulous maintenance of a comprehensive trading journal. This is not a mere formality. It is an indispensable tool for self-assessment, learning, and continuous improvement. Every single trade, without exception, is carefully documented, creating a detailed record of their market interactions. This includes the entry and exit points, the rationale behind the trade, the initial risk and reward parameters, the market conditions at the time, and the emotional state of the trader. The primary purpose of this rigorous documentation is to facilitate in-depth analysis of every decision made. By reviewing past trades, traders can objectively identify patterns in their successes and, more importantly, pinpoint the root causes of their mistakes. This analytical process is critical for correcting errors, refining their trading strategies, and optimizing their decision-making process. A trading journal provides concrete data that allows them to move beyond subjective feelings or vague recollections, offering clear insights into what works and what doesn't. It transforms every trade, whether profitable or not, into a valuable learning experience, accelerating their growth and enhancing their ability to generate consistent returns over time. 7. Identifying strong trading opportunities. Elite traders possess a finely tuned ability to filter out market noise and focus exclusively on signals that present genuine, high-probability earning opportunities. They are not interested in every market movement. Rather, they are laser-focused on identifying setups that align with their proven strategies and offer a favorable risk-reward profile. This selective approach prevents them from scattering their capital across too many speculative ventures and ensures their resources are concentrated where the potential for profit is highest. Their keen eye for opportunity is a result of extensive experience, deep market understanding, and a disciplined analytical process. A common practice among these highly successful individuals is to concentrate their trading efforts on stocks within hot sectors and those identified as market leaders. They understand that momentum often begets more momentum, and participating in areas of strong market interest increases the likelihood of significant price movements. This involves not only identifying the leading stocks, but also comprehending the underlying market dynamics that are driving these sectors. By understanding the broader economic narratives, industry trends, and investor sentiment, they can make informed decisions, positioning themselves to capture the most lucrative opportunities. Their ability to consistently identify and capitalize on these strong trading opportunities is a key differentiator in their journey to wealth. 8. Patience and correct timing. In the high-stakes world of Wall Street trading, patience is not merely a virtue, it is a critical strategic asset that separates the consistently profitable from the perpetually struggling. Successful traders understand that rushing into a trade, driven by impatience or the fear of missing out, is often a direct path to unnecessary risk and potential losses. They adhere to the principle that it is always better to forgo a potential trade entirely than to expose their capital to excessive or poorly defined risk. This disciplined patience ensures that they only engage when conditions are optimal and their edge is clearly defined. Furthermore, these traders recognize that the timing of an entry is often more critical than the exact price. They would rather pay a slightly higher price for a stock but enter at the correct time, when the market confirms their directional bias, than attempt to buy cheaper but at an incorrect or premature moment. Entering too early, even at a seemingly good price, can lead to prolonged drawdowns, increased psychological stress, and ultimately, a higher probability of exiting at a loss. Patience allows them to wait for confirmation, for the market to reveal its hand, and for their carefully constructed entry criteria to be met. This deliberate and unhurried approach to timing is fundamental to preserving capital and maximizing the probability of profitable outcomes. 9. Rapidly cutting losses and effectively managing profits. The ability to quickly and decisively cut losses is perhaps the most defining characteristic of Wall Street's $100 million traders. They operate under an absolute rule. Never, under any circumstances, do they hold on to losing positions in the hope that the market will eventually turn in their favor. This unwavering discipline stems from a deep understanding that capital preservation is paramount and that small, manageable losses are an inevitable cost of doing business, whereas prolonged losses can be catastrophic. They view recognizing a mistake and exiting a losing trade not as a failure, but as a smart business decision that protects their capital for future, more profitable opportunities. Simultaneously, these successful traders are adept at managing their profitable trades to maximize gains while also protecting accumulated profits. They understand that while many small wins and small losses are common, a significant portion of their overall profitability comes from a few big wins. These big wins are not random occurrences. They are the result of letting profitable trades run, trailing stop losses to protect gains, and understanding when to take profits strategically. This approach of cutting losses short and letting profits run is a fundamental tenet of their trading philosophy, ensuring that their winners are large enough to offset their numerous smaller losses and generate substantial net returns over time. 10. Deep market understanding through technical and fundamental analysis. Achieving sustained success in trading, especially at the level of Wall Street's elite, demands a profound and comprehensive understanding of market dynamics, coupled with mastery over various trading tools and analytical methodologies. These traders do not rely on guesswork or intuition alone. Their strategies are built upon a solid foundation of rigorous analysis. They typically develop their trading strategies by integrating both technical and fundamental analysis, or by specializing deeply in one, understanding its nuances and limitations. Technical analysis involves the meticulous study of price charts, volume data, and various statistical indicators to identify patterns, trends, and potential turning points in the market. This includes utilizing tools like moving averages, relative strength index, MACD, and other chart patterns to make informed trading decisions. Concurrently, or alternatively, they employ fundamental analysis, which focuses on evaluating the intrinsic value of an asset by examining economic indicators, corporate financial statements, industry trends, and global geopolitical events. This holistic approach allows them to form well-reasoned hypotheses about future price movements. By effectively leveraging these analytical frameworks, they gain deep insights into market behavior, enabling them to construct robust trading strategies and make highly informed, data-driven trading decisions that consistently yield substantial profits. These 10 unbreakable rules and habits form the very foundation upon which the most successful traders on Wall Street have built their colossal fortunes. Their consistent and unwavering application, coupled with a relentless commitment to self-improvement and continuous learning, is what allows these individuals to minimize inherent risks and maximize their profit potential within the dynamic and often unforgiving financial markets. It is a testament to the power of discipline, strategic planning, and emotional mastery that transforms complex market movements into opportunities for immense wealth creation. By adopting these principles, aspiring traders can begin to forge their own path towards sustained success and financial independence, understanding that true mastery comes from an unyielding adherence to these proven methodologies. The journey is challenging, but the rewards for those who embrace these habits are truly transformative. To further deepen your understanding of the timeless principles of trading psychology and strategy, and to learn from the legends who mastered these markets, there is an invaluable resource you must explore. Reminiscences of a Stock Operator, the classic work by Edwin Lefebvre, offers a profound analysis of the mind and methods of the legendary Jesse Livermore. This new edition goes beyond the original text, providing unique commentary and a detailed breakdown for each chapter, transforming Livermore's extraordinary experiences into practical, actionable lessons for contemporary traders. It bridges the gap between historical wisdom and modern market application, allowing you to glean insights directly applicable to your own trading journey. Do not miss this opportunity to learn from one of the greatest traders of all time. Follow the link in the description to get your copy of this enhanced classic today.